Stockholders came before the bondholders.
Very weird.
Which is bizarre. So European banks, which are not as strong as U.S. banks, you may get some black swans emerging there. So they're shackling the banking sector. And one of the questions is for entrepreneurs, what's going to fill that void? Is it going to be Tony Soprano or going to be other good organizations that come in and make these loans to...
You have something against Tony Soprano?
As long as he stays away from me, we're fine.
But they don't, right? I mean, to your point, they don't. And it's the unintended expectation here. What you do for one, you've got to do for others. So I cannot imagine in a series of troubled banks, if it were to happen, hope it doesn't, we'll do the exact same thing.
Yeah, and that gets to the whole question, though, of how do you prevent the federal government from becoming de facto owners of banks?
Right.
Signature Bank, one of the things held against that was they're involved in Bitcoin, cryptocurrencies, which regulators have made clear they want to run out of business. They don't like oil and gas. If these banks had been in Texas, we know what would have happened there. There are other industries they don't like. So you have them picking winners and losers. You see that in Europe. And one of the things that I think is going to really roil banks in Europe is they've created these bonds that the banks could issue after 2008, 2009 to shore up their equity. And it turns out the Swiss pulled the plug on those bonds, shocked people. I think they broke the law on it, so do others, where they wiped out the banks of
and we should say, in times of bankruptcies or duress, bondholders are supposed to move to the front of the line.
Front of the
line.
So the stockholders
out of the line.
So the stockholders came before the bondholders.
Very weird.
Which is bizarre. So European banks, which are not as strong as U.S. banks, you may get some black swans emerging there.
Deutsche Bank for a while last week. I mean, I'll ask you what I was asking Bob Dahl earlier, Steve, this notion that are we over the worst of it? What does your gut tell you? I'm talking about the banks.
I think we're over the worst of it, although you're going to get some casualties there. Thing to be watching out for, what companies are going to get in trouble since they borrowed a lot. Low interest rates forever, not.
Right.
And also countries are in trouble. And one of the things that's already come out now is how China is using this crisis to get their claws in countries around the world, like Turkey and others, saying, we'll lend you at great rates, give us your ports and infrastructure and things like that. And so I'm sure our State Department, as usual, is asleep at the switch in what China's moving in this situation. And the IMF, which is supposed to take care of countries that get in trouble, often prescribe the worst things, raising taxes, debasing your currency, devaluations and the like. So we got to get our act together on all fronts, financial and diplomatic, because China's moving in on those countries that are in trouble, and that means leverage against us. And one of the things that's going to happen after 2024 is, are we going to put in policies that get this economy moving? Remember, back in the 1980s, you had energy in a depression, agriculture in a depression, a lot of commercial real estate in a depression, but the economy is doing well because they had pro-growth policies. Right now we have anti-growth policies, which are going to make these troublesome areas even worse.
I know your views on the Federal Reserve. They're well known among those who follow you closely, as do I. But the feeling seems to be that the Fed now has room to just cool it for a while on interest rates, if move at all, the remainder of the year. Maybe one hike down the road. The consensus is never right, as you've reminded me, Steve. But that is a building view here. But it still has inflation to address. I mean, it's still running at a 6% clip. They want to get it down to a 2% clip. What do you think?
Well, in terms of raising interest rates, which simply trash the economy, I hope they do back off. Some are calling for that for the wrong reasons, but I think trashing the economy is not the way to cure inflation. Key thing is stabilizing the value of the dollar, which is, again, starting to fluctuate again. Fed doesn't know how to fight inflation.
There's plenty of competition to take on the dollar, right? The Russians are backing China's believed to be an alternative currency, right?
Yeah, the dollar's still in a very strong position internationally because of the strength of the U.S. economy and uses in international trade. But if we continue to debase the dollar, continue to make it unreliable as it goes up and down like a yo-yo, you will see alternatives rise up. Again, not good for good economic growth in the future. So go back to the early 80s. We got it right there. And actually in the mid-90s, early 90s, great moderation. When Greenspan looked at the gold price, he looked at commodity prices, tried to have some stability, and it worked.
Yeah, it did work, didn't it? It did work. All right, Steve, thank you very, very much.
Thank you.